Hi, everyone. Thanks for joining us on a session that's going to be geared towards the existing mutual fund investor. If you're a new mutual fund investor, we just finished up a new to mutual fund investing webinar, which will be on YouTube shortly later today. And we still recommend that you listen in on this webinar because you'll get a sense of the tools that we have that will help you continue your journey in investing. Now, for those of you that have existing mutual fund investments, I want to give you a little bit of a sense of why we started Bharosa Club and what our technology is all about. So what we noticed is that consumers are at a massive disadvantage when it comes to picking the right investments and assessing how they perform in the market. It's probably the only product in the world where you buy the product and you don't know what you pay and you don't know what you get. So it's like almost like paying a contractor a blank check to build a house for you and not even being able to see if the house is good or not. That's kind of how I analogize the entire buying experience of mutual funds, and not just mutual funds, a lot of financial products. So we saw potential at Barossa Club to arm our customers with data to help them make better decisions. So that means Barossa Club, where we sit in the entire ecosystem, is we are an advocate for customers. We are trying to arm you with data to make better decisions. We do not work for the manufacturers. We do not work for the advisors. We work for you. And that's a very central part about our DNA and what makes us different from a lot of other platforms you see out there. And that's where we're investing our efforts in arming you with data. So what I would tell you guys very stridently is that a key factor behind why you can trust our data is that all our money is going to be made from you guys, not anyone else. We're not taking any kind of commissions or side payments or anything. Member fees is how we're going to support this company. And Ujwal will give you a quick little 2 seconds on what's coming on that. Ujwal, you want to speak about the founding member program real quick before I get into how to get the most of the tools?
Sure. So starting tonight at midnight, we are opening up a small program called Founding Membership. And what we want to do essentially is that most companies do not, reward their early customers. They reward employees. They obviously reward investors, right? What we want to do is back the people who are backing us right now. And so for 1,000 slots, you can pay 1,000 rupees right now, okay, and lock in that price for life, right? So for every PAN in your system, okay, and you can also book extra slots, but you pay 1,000 rupees per slot that you book. And for the rest of your life, you can pay 1,000 rupees a year for that. Okay. And right after these 1,000 slots close, we will double the price to 2,000 rupees. And we are going to add stocks and a lot of other stuff in the future. But your pricing will stay locked as a founding member.
So it's a way for us to thank our early users and supporters for helping us craft this product, because we are getting lots of good ideas from all of you. And I promise that we're listening to them. We're a really small team right now, but we have a long list of features that we want to release. But frankly, even where we stand today, we think that you guys have access to now the best mutual fund platform in the world. And it's going to get better and better from here. So we're really thankful for you guys in supporting us on this journey, and look forward to seeing you guys become founding members. So what I would say is don't sleep on that thing, because we already have close to 1,000 people using our tools. So try to sign up quickly and lock in your rate at 1,000 rupees a year for life, or what again we think is really best in class technology. So let me tell you why it's best in class technology. So I want to basically use this demo account that we have to walk you through how I would analyze it if I were looking at the monitor page. So essentially where I will actually start is in a little bit different place. So I'm going to start at the holding power section. Okay. So basically when, as Ujwal covered in the new to MF seminar, Holding power is our view of the best way to think about your asset allocation. Most people are going to tell you, oh, your debt mix is this, your equity mix is this, your cash mix is this, your gold mix is this. Arey, what does that mean? How am I supposed to interpret that data? Is it good? Is it right? Is it wrong? What we're trying to do here is help you be able to assess whether your asset allocation is correct or not. So the way this technology essentially works is every single fund that you hold in your portfolio, we analyze it and our technology buckets it into the right category that it belongs. So if you're holding a fund that is appropriate for money that is emergency money, then it will show up in this category here under emergency. If it is money, if that is appropriate, if it's an investment that is appropriate for money from 1 to 3 years, it'll show up here. 3 to 7 years, it'll show up here. 7+ years, it'll show up here. And as we mentioned in the new to MF calls, getting this chart right for your personal needs is far more important, in our opinion, than any other decision you make in your investing. If you can get this right, you're going to have a huge advantage over other investors. And that's because the difference in return and risk between each of these buckets is massive. If you put short-term money into 7-year category funds, you're running a big risk that the market is not good next year. If you put long-term money into emergency funds, you're going to earn a very small return for money where you could earn a higher return. So that's why I'm starting here. So how would I analyze this if I were this person? The first thing I would do is I would look category by category and look at the amounts in each of these buckets. And I would ask myself, is this how much I want in each of these buckets or not? Right? So for example, this person has about 50,000 in emergency funds. Is that enough or not? That is a question that that person has to ask. Maybe they're sitting with savings in a bank account that they can use to supplement their emergency funds. So these are very individual questions. But the way I would think about it is first asking the question, do I have enough in my emergency fund? If not, my first priority would be moving funds into that emergency bucket. Similarly, looking at the amount I have in 1 to 3 year money. Does that cover my needs for the next 1 to 3 years, 3 to 7 years, and then 7 years? Once you've got this piece right, you can use our tool to stay on top of it because everything changes, right? Maybe I've got a more secure job, right? And I'm willing to have less in emergency now, so I can shift that over time. So the whole goal is with a simple view, you can get a sense of what our portfolio tells us about you and your needs and when you need that money. And you just need to ask yourself, does that data correspond to my actual needs or not? So that's where I would recommend everyone starts first. Next thing I would do is essentially look at the headline data. Okay, this is going to tell you what is my current portfolio value? What has it done over my entire lifetime since I've held this money? So we look at the earliest transaction we made, because again, when you import data into Barossa, we take your entire history of every single transaction. So we are able to give you insights that very few people can give you. So for example, how have my mutual funds done for me over the long run? Has this been working for me or not? So for example, this person's done quite well. They've gotten 11.1% return. They've made 11.6 lakhs since they began investing, which is a lot of money. And they've done quite well because 11% return is much better than FDs, etc., etc. You can also get a sense of how you've done in the last day, which is not too meaningful in my view. Some days are up, some days are down, but this will help you keep tabs on it. Okay, the next section is Paisa Vasool Insights. I'm going to come back to this section because it's a little easier to understand how this works when I explain some of the other sections. So let's come back here. We'll just bookmark that. You versus the market. Now, this is one of the things that I think is most revolutionary in our technology. People have struggled to be able to answer this question with their portfolios because portfolios are complicated. You will come in at different times. You will put your money in different types of assets. Maybe you were 60% debt. Now you're 20% debt. how do you actually know if your investments are working for you or not? And this is what I was talking about in terms of making sure you're getting Paisa Vasool. What Bharosa's technology does is we go transaction by transaction by transaction. Every single move you made. If you put money in a debt fund in 2017, January 1st, we go and we look at that fund, our technology, and it sees what is the right benchmark for that fund. And we replicate that change, that transaction with that fund's benchmark. And we keep doing that. And at the end of the day, we're able to compare these two portfolios and see which one is higher, the benchmarks or the funds. And that helps us isolate, are you keeping up with the market? Is the market, the benchmarks, beating your portfolio, or is your portfolio beating the market? So you can finally actually get data to the nearest pesa of whether your fund is matching, whether your portfolio is matching the market. And the goal here over time is to lower the amount of red you see on this chart. So seeing red on this chart is not unusual. Don't be scared about it. Most people see red on the chart. The goal is to make it slightly green consistently. And with our technology and tools and careful use of it, we think that's achievable for everybody. So you can actually click on details here or any one of these time periods to understand how these numbers are calculated. You don't need to take our word for it. You can actually have an audit trail to understand exactly how these numbers are calculated. Another key differentiator in our platform. There are no surprises in terms of how we calculate things. So you can see, okay, Aditya Birla SL Corp Bond Fund, okay? Its benchmark is the CRISIL Corporate Composite Bond Fund. If I invested in the benchmark, I would have made 9.32 thousand rupees and earned a rate of return of 4.4%. But I actually invested in the fund, which got me a 5% return. So actually this fund gave me Paisa Vasool. It beat its benchmark. However, the Canara Rebecca fund did not. So this is a very powerful way for you to keep tabs on your investments. Now, the good news is you don't need to go into this level of detail. We do it for you. But if you're a data junkie and you enjoy this and you want to actually analyze all the numbers, it's all here for you. So you can get comfort that our technology is correct and working. Now we can come back here. So what these Paisa Vasool insights are basically, we are monitoring your funds constantly. Every day this is updated. And we're checking of the funds you hold, which funds are not Paisa Vasool. And what we're doing is analyzing those funds and seeing whether it potentially could make sense to exit these funds. And the way we do that is very simple. We run a calculation. We say, what if this person exited this fund today? How much would they owe in capital gains tax? Our estimate of what they would owe in capital gains tax. That is this Paisa amount here. We compare that to the estimated differential between the fund and its performance, the alternative going forward. And we compare those two numbers. And we basically say, if the gain is more than the tax enough, then it makes sense to exit the fund potentially. So it will show up in this list and we will tell you, hey, this is a fund you may want to review. And you can always get the detail about why we think that when you click learn more, and you can read all of this and see our recommended actions for you to consider. So we do the hard work and number crunching for you. But the reason why you may not see all your underperforming funds show up in this Paisa Vasool Insights section is because there's a very detailed calculation that backs up all of this information. One is the tax that we analyze, and the second is we also give time for your funds to perform. It's not fair to judge a fund on 6 months, 7 months. We recommend only drawing conclusions on funds after a year. So that's when funds start becoming eligible for this Paisa Vasool Insights. It's a fantastic way to stay on top of whether funds are breaking their promise to you or not. And like I said, you can always dig into the details here to get the data. Another central question that we wanted people to help answer for themselves is, how is my portfolio changing over time, right? So like all these tools you're providing me and data you're providing me, is it actually helping me make better decisions or not? The only way you can answer that question is by looking at trends in your portfolio over time. So this chart, for example, shows you how much of your portfolio you're paying in fees year after year to advisors and your mutual fund companies. Now, we only capture the fees that are paid through commissions here. So if you're paying anything out of your pocket in excess of this, it will not be captured here. That's one caveat for you guys, but it'll give you a very good sense of how your portfolio's health is changing over time. So you can see that in this account, the person has managed to reduce their fees considerably and pay less and less in Paisa every year. Now, the next huge question that we want people to be able to understand is, okay, I'm paying less, but how is my performance doing? Am I actually, are my funds actually delivering? So you can see here that this chart basically shows your performance versus the market for each year. And you should expect some volatility here, but the goal and what we think is achievable is to show very little deviation to the market. You should not see big swings up and down. Like this chart is showing relatively big swings. In 1 year, up 2.9%, next year down 1.2%, next year down 2.9%, then down 3.4%, then tracking the market. The goal should be to see very little deviations and hopefully some green years as well. And so we think that's achievable for most people. And we think our technology can help you get your portfolio into that zone. How? That next chart is going to show you how. So this chart basically shows you how funds that are Bharosa bundles, these are funds that are included in our playground, right? If you own any of these, and this person does, they own two schemes that are Barossa default schemes, the same schemes that you see in our playground section. It shows you how they perform versus all the other funds that you own. So by hovering, you can see which funds you own, and you can see that they actually kept pace with the market, while the rest of the portfolio lagged the market. So over time, you can compare how Barossa's default funds are doing versus the rest of your portfolio and see if you're gaining confidence in moving more towards default funds, or if you're a good mutual fund picker. Some people actually may be very good at picking the right fund manager, right strategies, right sectors. This will be a very good way for you to understand whether you should do more active or more passive. So for example, my conclusion from this would be that I should do more passive, because the passive funds I've invested in, that Barossa default passives, have actually done better for me than the rest of my portfolio. So it's a pretty simple calculation for me. Okay, the next section is really exciting. So we all construct our portfolios through a hodgepodge of strategies, right? Someone may recommend a fund to you over a dinner party. An advisor may put you in 3 different funds. You may have done your homework on money control and picked 4 or 5 funds to put in. And you've built this complicated portfolio of maybe 25, 30 funds. Now the question is, if you put all these things together and you analyze the portfolio as one giant fund, what are you actually betting on? Answering that question has not been possible before, but now it is. Now we'll actually say, okay, you've done all this. Now let's look at your portfolio and how it compares to an average portfolio. And let's actually see what makes your portfolio different. So now you can sit back and say, do I want my portfolio to be different or not? So for example, this person's portfolio has above average exposure to large cap companies. This could have said many different things. It could have said you have above average exposure to agriculture or industrials or consumer products, whatever the data says will show up here. And the best part about it is you can actually click in and get data on how big your bet is. Is your bet helping your portfolio or hurting it? So you can monitor all the key decisions you make. So again, Barossa is not telling you what to do, but it's giving you data to keep yourself honest and show whether these decisions are helping you or hurting you, and understand what decisions you're making. So this person could say, for example, I am betting on large cap companies because 80% of my portfolio is allocated towards large caps, but the average portfolio, only 75% is in large caps. So I'm betting 5% more on large cap companies. Now the question is, does that help or hurt? Well, since I made the bet, it's actually hurt. I'm actually losing money by betting on large caps, because we're able to compare the average portfolio to the large cap picks you made. And if you want to see which funds are contributing to it, just hover on the bet and it'll show you all the schemes that you own that have above average large cap exposure. So it will help you manage that bet if in case you want to exit. The next section is how your portfolio value has changed. This is very useful in making sure that you're saving up to your needs. It'll show you the net money in and net money out, and also help you understand how much your portfolio value has changed over time. You'll also have a good understanding of how much you're paying in fees projected over the next year and to whom. So this person's only paying mutual fund companies. There's no extra commission that they're paying to advisors. So here again, we're helping you answer the question, how much am I paying? Am I getting Paisa Vasool? Do I really want to be paying this advisor? Is he really adding value? Now you have the data to understand that. And then we also have a section that helps you understand what your tax bill is estimated. So if you're making redemptions, so you're not surprised when it comes tax time, we help you understand what your running capital gains is based on every transaction you made. And the best part about it is that you can download all this data and go through it and have all of it in CSV files and everything. This is your data. We're simply analyzing it for you. It belongs to you. You can download it, do whatever you want with it, move it to another system, show it to your advisors. It's here for your benefit. And that's basically the monitor section and the value I'd get from it. Let me talk a little bit about where we're going from here. So what we've done for mutual funds is step one. We want to expand this into stocks as well, PMS as well. That's on our radar screens. We know a lot of you have investments outside of these, and we want to help you understand how these investments are doing, so you can make good decisions in terms of where you want to put your money. So that is on the agenda. We are also going to help you find fresh investments. So let's say you want to make a bet. Nothing in Bharosa so far helps you make a bet. I want to make a bet on retail companies in India that have outperformed the benchmarks. So we're going to have a tool called Explore Funds, which is going to help narrow the search for funds to help you find good funds to make bets. And we'll also help you again monitor those bets through the technology you've seen earlier. So a lot of exciting stuff on the horizon. And so that's all I had prepared. If there's specific questions, we can deal with them now.
Okay, so 1 minute, let me see chat. Do parameters like beta, alpha, Sortino, and Sharpe ratio, are they currently looked at to determining Paisa Vasool for passive funds versus active funds?
So, it's a good question. So our view is to keep it very simple, because while ratios like that and all are theoretically calculable and all those things, the fundamental thing we all look for when we make an investment, when you invest in an active fund, you are saying basically, I'm going to invest an extra fee, and for that extra fee, I expect something in return. Now, yes, those ratios do matter in terms of risk weightages and all those kind of things. But if you look at a long enough time period, and we feel like a year is the minimum acceptable time period to start analyzing and asking the questions, I think the value of all those ratios go away. At the end of the day, these funds have to deliver Vasool. Otherwise, their fees are not justifiable, right? Why would you pay more money? Even if a person's Sharpe ratio was good historically, at the end of the day, you want them to beat the benchmark. Otherwise, why are you paying the money, right? So while those ratios can be useful, we think they muddle the picture in terms of making clear decisions. So we actually just look at fees and performance versus the benchmark. And the
Okay.
other thing is the benchmarks are apples to apples. So if it's a small cap fund, we're analyzing it versus the small cap benchmark. If it's a sector-based fund, it's analyzed versus the sector benchmark. So that also addresses some of the risk weightage parameters that the person was asking about.
Okay, there's a question on the capital gains. The capital gain estimate module is not active, is it right?
The
It is.
capital gains module is active. It's not exposed to you in the sense that you cannot currently just click on a fund and say, if I exited this many units, how much would I owe in capital gains? We'll build that and add that. It's a feature that's on our list. But the capital gains module is active insofar as it's included in the calculations for Paisa Vasool insights.
No, and also, I think the question is more based on the bottom part, which is the tax estimate. If you change the year, if you had any redemptions during the year, capital will show up.
It is active. This person didn't have any redemptions in this year, so that's why you don't see the capital gains, but it is active.
Okay. Harsha has asked a question, is average portfolio under bets, is this the average of portfolios within Bharosa Club, or is it the average of portfolios all across?
All across. It is basically the average composition of the entire equity market in India. So nothing to do with Bharosa portfolios or anything, but that also reminds me of a feature that we're going to be releasing, which is helping you learn from the community. So one of the things that we think is very valuable is if you have a club of very savvy people who are using data to make better decisions, understanding how you compare to the community is also something that we intend to give you data on. So for example, you could say, how does my expense ratio compare to the average Barossa member? How does my passive fund exposure compare to the average Barossa member? Learning from each other is a great way to improve. And so that is coming. But to answer the specific question, it's the entire equity market in the case of bets, not just what we see in Barossa.
When will the redemption option be active and by when?
I would say that probably within 2 months. We have a backlog of stuff we're trying to work through. I know it's frustrating to wait for all this stuff, but like I said, we're a very small team. So we're actively working on expanding our team. That's the number one priority because we're seeing very good growth and we want to start adding some resources. Once that's done, we're going to start going quickly. So give it a couple months, please.
Post uploading historic data, how can I add new transactions each month so that I stay relevant?
Yeah, so there is a refresh functionality. We enable refreshes. Ujjwal, you want to jump in here? I'm forgetting if it's a week or 5 days. What is the minimum?
A week.
A week. So after a week, you will have a little banner that comes on top of your group that allows you to regenerate a CAS and re-upload it. So we'll get all your incremental transactions. One other thing that we're investigating is making it simpler for you to refresh through just entering an OTP to refresh. That won't be for the first upload, but for your refreshes. But again, that is a couple months away.
I don't think there are any questions anymore. So
there's a hand up. Jyotsna has a hand up.
sure, Jyotsna.
Hi, I joined in at about 6:10. So can you hear me?
Yes.
So my question is like, I have a portfolio which Kotak was handling and some other company is handling. So if I join you, you will see that the advice that they've given me is the correct advice. I pay you 1,000 rupees and you will check to see if they're giving me the right advice.
Yeah, so basically that's a good summary of it. We will analyze it and give you data to see how the advice is performed.
But meaning, will you tell me that exit this fund, or you'll give me the data and I have to use my own judgment? You will just tell me.
So Jyotsna, we will give you insights, these Paisa Vasool
Hmm.
insights. That are
Hmm.
suggestions for you to discuss with your advisor, right?
Hmm.
Now, we are also beta testing a more full service offering, but this is in beta. So it hasn't been released to the public yet. If you're interested in doing that, we can see if we can squeeze you in, but that would be a more full service offering where Bharosa would actually act as your advisor and help you migrate your portfolio.
Yeah,
Migrated
I
from
can.
where? From Kotak to to
Yes.
beta.
So, I am sort of heading that part of the thing that we are testing. So basically, there are two types of advisors. One are advisors who have what is called an ARN or an AMFI reference number, and they take a commission from the manufacturer. So they put you into regular funds. So you'll see that the funds have the thing called regular. And the other types of advisors are what are called RIAs. Now, the AMFI advisors are registered with AMFI, which is the Association of Mutual Funds, while the SEBI advisors, the registered investment advisors are registered with SEBI. And they are not allowed to take any commission from any manufacturer. And they're very tightly regulated. And they have a fiduciary duty to the customer. So they can only charge a fee. So what we are doing in the beta is to use the Bharosa advisory service. You first have to be a member of Bharosa Club and upload your mutual fund portfolio, because we have to get that analysis, which will help us give you the correct advice. Then using that, the fee that you will pay is 6,000 rupees for 6 months. But that's for a family unit. So it's not per PAN, right? The club charges 1,000 rupees for a year. Here we charge 1,000 rupees for a month, but for a family unit. And this we are just testing out right now. And the whole idea is that because we got a lot of feedback that these insights are great, but we are having trouble, because our advisor executes for us. They tell us what to do, etc. And we are not comfortable just using the insights on our own. So with the advisory, what we are trying to do is provide a full service, including execution and all that, and help people get a common account number so that they can transact on their own and not give advice as if it's a black box. Because we want to explain to the person how this advice is given, with the idea that at the end of 6 months, if they want to say, oh, I now know everything, I can be my own advisor, I don't need anybody else, that would be a great outcome for us.
Yeah, so if we can just nip this in the bud a little bit, because it's beta still. Jyotsna, if you're interested in exploring the beta product, then just email us on support@bharosaclub.com and we'll see if we can fit you into the beta test of it. So, okay, there was a question on Satya, the segregated funds issue. So Satya, you raised a good point. So the reason you're not seeing a capital gains there, even though you did a redemption, is because it was a segregated portfolio. Barossa does not have the data within the CAS to correctly estimate capital gains for segregated portfolios. So that's why I didn't pick it up, because we don't have all the data we need in the CAS to calculate it. It's a good point. We'll clarify that piece so it's clearer that it doesn't include that. Any other questions that I missed? Otherwise, we can.
I think we've covered everything. I don't think there's any other questions. Anyone? We'll give you a moment.
Okay, a question came in. Do you have a plan for bringing in EPF, NPS in scope? Satya, to be honest, those things are far down the list. Stocks and PMS are much higher on the list. So no scope for that in the near term. Anything else? Let's just give it a few seconds to see if.
I'm going to anyway stop the recording because people who want to ask a question can always unmute themselves and ask.